Welcome to the Capital Spreads Weekly Update. Today's Thursday, the 30th of June 2010. Well, another busy week, but we've had quite a strong sell-off in the financial markets over the last few days, and there's been a number of key reasons for this. The first is the fact that the European banks are expected to repay about 442 billion euros of loans back to the European Central Bank by tomorrow. Now, there's a lot of concern that a number of the European banks that have used these loans will actually find that they have a funding problem, and as a result of that, it could lead to another possible mini banking crisis. At the same time, you've also had some figures come out of China which have shown that Chinese growth might not actually be as strong as has been previously anticipated and predicted. As a result, that's also been feeding into the negative sentiment. Finally, you had the US consumer confidence come out yesterday, which showed that US consumer confidence was far lower than actually anticipated, and that helped magnify the negative sentiment we've had over the last week or so. So looking at the situation as it currently stands, the FTSE is currently trading around 49.20. It's up about 4 points in the day. It's broken through its 200-day moving average on the downside back on the 25th of May, and it's been acting. The 200-day moving average has since been acting as a resistance level since. Since about the 20th of June, we've had quite strong momentum on the downside in the FTSE. It hit the support level around 4900 recently, a level it last tested back on the 25th of May and bounced off that since. If it continues powering through the 49 level, you're looking next at support around 4600, possibly 4500. However, if it continues to find support around the 4900 level, it could very well continue to bracket and trade between 4900 and 5300. Sterling at the moment is also finding quite a lot of favour among many traders and investors. Over the last few days, you've had sell-offs in the euro, for example, while sterling has continued to hold on to some of its gains. Now, this has partly been off the continuing concerns about the eurozone budget and deficit problems. At the same time, the budget that came out of the UK was a lot more positive than was actually expected by many people. It's shown the UK to be doing something about the problems it's had, and many economists as well as credit rating agencies have viewed this as a very positive step for the UK economy going forward. As a result, that sterling euro at the moment is currently trading at 121.00. It hit a high of about 124.00. Very favourable for those that are looking to go on holiday into Europe over the next few days, or even the next few months, I should say. Sterling euro at the moment is finding a strong uptrend at the moment. It could certainly go back up to about 125.00 if it continues its strong pace at the moment. Looking at the commodities, gold is currently trading around 1246. It came within about $2 of its all-time high again before being sold off very aggressively by some very large orders in the market. However, the long-term uptrend is still in motion at the moment, so you could possibly see gold at least trying to trade and try the high of the all-time high in gold again. In the short term, you're possibly seeing gold bracket between about 1230 and about 1260. However, you'd possibly be wiser to be long gold than short at these levels and in going forward. Oil, in the meantime, seems to have found a new trading range between $75 and $80. Hits about $80, comes off now. It's trading near the lower side of that range, around $75.50 at the moment, and bouncing from here. Again, this is very much reflecting and related to the uncertainty that we have in the global economy, whereby you seem to have positive news one week and negative the next, and that's feeding into the sentiment and the oil price as a result. In terms of the week going forward, we have a number of key figures coming out the next few days which will possibly move the market quite strongly. The biggest of which will obviously be the non-farm payroll coming out on Friday. Now, we're actually expecting a fall in the jobless rate, a fall in the jobs created in the US by about 125,000. Any figure either way, it's actually expected to move the market, considering the uncertainty that we have at the moment. You've also got, for example, pending home sales coming out of the US tomorrow, which can also possibly move the markets, simply because it indicates whether the US economy continues to have traction in pulling itself out of the economic slump that we've all been experiencing recently. In terms of client positions, many of our clients have been buying into the falls that we've had in the equity index markets recently, so they continue to buy into the DAX, the Dow, the S&P, hoping that it's going to bounce from here and believing that the sell-off recently was overdone. At the same time, they continue to hold long positions in both gold as well as oil. Oil more likely possibly because it is at the bottom of its range. In terms of a theme of the week, I think the theme of the week should very much be a theme that we've revisited, a theme that we've had in the past that we should now revisit, and that it really is concerns about the eurozone, its deficit problems, and the stability and strength of certain European banks. After the repayment of the ECB loan tomorrow, as I mentioned, it looks like certain European banks, particularly those in Spain, may certainly have funding problems, and certain people are definitely concerned that we could maybe experience another mini banking crisis. Even if that isn't the case, you still have certain Eurozone countries which could still come out with unexpected and unannounced deficit and budget issues that have not already been factored into the market, again causing a lot of uncertainty in the financial markets. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.